Hey everybody, great to have you back here for Trading ThinkScript. Got some great stuff to look at today and really want to discuss with you all some of the topic requests that we've had as of late. There was some on earnings and earnings trends. We've got some details on that for you for sure. There was also an interesting request too on creating a script that could find a percent of stocks above a particular moving average and one that is maybe more versatile. We have some pre-built ones that are like that, but we have now within ThinkScript, we can adjust those numbers so that it can fit whatever sort of moving average you might be after. For example, percent of stocks above the S&P, in the S&P 500 above 20 or 22 or whatever it may be. It can be very interesting to give us a sense of sort of, how is the market responding to risk on, risk off, and collectively. So looking forward to going into that as well as trading some ThinkScript today too. So with that, welcome to each of you. I probably already said welcome a couple times, but hey, welcome again. Hello to you, BJ, as well as we've got BJ, we've got Wacky, we've got Buddy, we've got Life in the Fast Lane, JV, Will, how's it going, Will? Good to have you here, as well as Rojo and Olga, Scott. Aloha to you, Scott, as well as good afternoon to you, David. Folks, any questions, comments you have, direct those to the chat because we do have a good friend and colleague of mine in the chat with us today, Cameron May. You'll see Cameron in there as CM. By the way, you can follow us, and Cam did link it at the bottom here. Follow us, give us a follow on X. Cameron May CS, Mike Fairborn CS as well. All right. Well, hey, looking forward to it. Let's get some disclosures so we can get into some ThinkScripts today and some ThinkScript scans as well. All right. So first off here, equity and index options carry high level of risk, not suitable for all investors. Now, information here is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Now, the Paper Money software application, it too, is for education purposes only as well. Backtesting results presented are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results. Investing involves risk, including for some products more than your initial investment. Now, past performance of any security or strategy does not guarantee future results or success. A good look at our futures there. Futures disclosures, futures options trading does involve substantial risk, not super for all investors. And we just look at charts here. We do not look at actual futures themselves as we go through it. Some of the steps to ThinkScripting: identify the goal. Can ThinkScripting meet that goal? Outlining steps to the ThinkScript, applying the ThinkScript's tools, writing custom scripts when needed. We've been borrowing a lot from indicators or indications as of late. Test what is written, and then we share that link. And we do share that each and every week, and I think many of you are pleased to know that. Welcome to you, Gentle John, as well as Susan. We're just getting the show on the road. I'm sorry, but you might have missed some of the disclosures. I'm kidding. No, they're there. But taking a look at where we're at. Wow, we're seeing some moves out there in the market. And oh, I flipped this over here. Let me go flip this back to a daily chart. Some of these moves have been really interesting as of late, particularly in the area of technology. A quick look here just at our sector grid. I'll go kind of full screen just to show you here. But you know what's really been keeping pace is the technology and obviously communication services with the S&P 500 over here. Now, guys, we've talked about this before, and we've looked specifically at this class in terms of relative strength, and it can be helpful and effective when we're looking at relative strength compared to an underlying market. Here is a 6-month sector grid using that relative strength indicator across the board. And what the beauty of it is it just shows the sensitivity. I'll pull up one here. Well, technology, look at this. This is a good reference point when we just looked at charts. And you'll notice a lot of those charts that we just saw were actually going up or sideways on the actual price data themselves. But when we turn over and we say, okay, well, how are they doing relative to the S&P 500? Are we getting buyers coming in relative to sellers? We have a grand total of two. We've got two. We've got technology over here that has been outpacing the S&P 500, and we've got communication services. Now, this is referred to as the sector rotation grid. And it is interesting because it can give us some insights into rotation. Where might the money be going and where might it be leaving? In other words, These other sectors, folks, they're just not even keeping up at all. They're not even keeping up at all. Look at healthcare down here. I was just looking using some of our think scripts that we've done in the past. I want to show you a couple of healthcares. I'm going to show you some others as well that are really quite astonishing, especially as it relates to, look at this, discretionary. Now, does that look good for a 6 month chart to you? It looks like it might be making a lower high and possibly a lower low. Look at this. If I go back to my grid real quick, the sector grid itself, and just highlight it, well, where's discretionary? Whoa, that doesn't look nearly as bad, right? The other one gives us more insight as to where institutions may actually be heading. Technology, communication services. Think about AI. Think about the innovation and the productivity cycle within AI right now. To be honest with you guys, I don't know how many of you lived through 1990, well, 95, really through 99. Basically the first part of 2000, the uh, dot com bust bubble. But we had a productivity gain there too. It was the internet, as you recall. Supposedly AI is much, much bigger in terms of productivity, innovation, scale. But this is an interesting check as to the health of what's going on here. We're just using ThinkScript to help us out. A really simple one. Not here. I mean, this is not ThinkScripts aren't guaranteed for timeliness or accuracy. This is not a ThinkScript. This is just simply a chart. And I'm going to share this though with you. I talk about this a lot in the markets and sectors class on Friday. That's tomorrow. And so here we are at Friday Eve, right? But you know, you can use these tools to kind of get insights as to what might be moving. I'm going to go back to it here. I'm going to highlight one of these. I'm just going to show you what's going on behind the scenes. That's it. I'll share these two with, well, let's just start sharing right now if you don't have them. Okay, well, because we're not going to come back to this guy. So here is this one. This is just the, oh, we'll share it right here. This is just the standard. Some of you haven't, we haven't actually gone through this in this class, but I want to make sure you have it. 'Cause we're going to build on it a little bit today. But this is the S&P sectors. Sectors only. There it is. Okay, into the chat. Now this one's going to be the S&P. It's still 6 month on both. It gives us a good kind of a path to take a look at these. But if we look at, let's just say healthcare over here. I'm going to pull it up right now. Maximize that grid. What's going on behind the scenes here? I'm going to show it to you. That's it. It's relative strength compared to the S&P 500. And what's really going on here? This is our little study. You'll get this when I share it with you, but that's just so you can see healthcare over here. We utilize these in this class for sure. This is a built-in indicator that is just looking at the security itself relative to the S&P 500. It gives us a really cool feel because what is the one closing price relative to the other? The sector relative to the index. Is one strengthening relative to the index or is it going down? Because, you know, discretionary could still be going up, but it's going up very, very little. Maybe it's just retail investors that are buying by and large, not the institutions that can actually, have a bigger impact in the market at times. This is what traders might speculate on. See, it's just the relative strength indicator. It's so cool though because it provides us this. Let me go ahead and just share this. I think many of you have it, but some of you don't. So we want to make sure you get that there. So let's share this into the box and let me know if you have any issues pulling that up. If you are new, you might. Don't be afraid to ask. We were all new at one point in time, and I want to make sure you're all set as well. S&P relative strength. We'll make it nice and descriptive so we don't lose it. Okay, so here we go. Now, you know what this can help with? A few different things, but like over here, you know what's really been falling? How about a 12-year new low? You want to talk about relative strength falling apart? Folks, that's Nike. That is a 12-year new low. Let me go to our weekly, 15-year weekly. Isn't that nuts? This is about a 75% pullback in this group. And right over here, let's just go 6 months or so. Do you see it? The chart on some of these discretionaries were like this. They were okay. But behind the scenes, collectively, some of them were going up, but relative to the market and even relative to some of the stocks within them, they were really taking it. I mean, that's down. That is, I mean, go over here. Wait a second, 2014. Yeah, there you go. 12 years ago. 12 years ago. This is more of a turnaround story now than it is a growth story, right? And 75% dip into that range. So competition within the markets, I'm not sure if the tariffs helped. Probably not. Another one over here, Lulu. Wow. Interesting symmetry on this stock, but down here, I mean, we're trading all the way down to 2018 levels. Same thing kind of picked up. Remember, I just showed you healthcare looked pretty trashy. I mean, didn't look great. Uh, the chart itself looked okay. This is a big healthcare stock. I'll go zoom into the last 6 months. This began to dip. And in terms of an ADX indicator, we talk about this a lot. In fact, I've got an ADX scan I wanted to look at again today with you and show you because this really does help to identify a lot of trend strength out there. There's your ADX right there. Take a look at it. When you start to break above that 25 right there, remember, ADX does not give us a direction. We have to reference the chart to get us a direction. Now, I realize the stock is bouncing a little bit here, but that's a pretty serious lower low and lower high in terms of a downward move. Now, it could bounce, but it could also start to bear flag too, right? When we break above that 25 right there, as we've talked about, I think more in our swing trade class, but it shows an indication of trend strength. Let me just flip it on its head. Let's go right into a technology stock that was showing strength. Well, here's Apple. Okay, and a lot of times on something like an Apple II, take a look at this over here. An Apple as well. I said an Apple II, which is actually a computer, an Apple II. One that my friend used to have, uh, by the way, but that's a long time ago in the 80s, early 90s. But there you go. Look at this over here. When you break above 25, this is an old classic indicator from Wells Wilder, the same guy that did, well, he did this too, the RSI. It's a 14-day period and it matches a couple of different indicators, the DI minus and the DI plus, but the combination of the two will show you when you're getting above, so that's north of 25, you can kind of see some strength. And what it does, and sometimes it oftentimes shows, is an interesting resistance break. Do you see it right there? Kind of looks like if you're looking at it, um, like this. It sort of looks like a cup and handle here, or even up a little higher, but I would say probably about there. Cup and handle and a break, folks. Now, this could mean a lot more movement since we did break above that level, at least on a cup and handle scale, to about, that's about a half. Let's see what. Okay, yeah, so one, two, probably up. Okay, I'm off the chart here, but probably up here is the first target for a cup and handle. I'm just kind of eyeballing it. But there could be a ways to go. We're getting very close to 300 as well. There could be some natural resistance there as well, minor pullbacks or whatever. We don't know where it's going to go, but I'm just stating this is interesting. When we're looking at technology, we should be thinking of other indicators here. And we've got a lot of them in ThinkScript to look at for our ThinkScript trading. Classic indicator coming out to us from 1978, the ADX. It's been around for a while, but we're going to go ahead and scan through this a little bit for our ThinkScript trading portion today because it is relevant, incredibly relevant right now to the markets themselves, right? In terms of just finding where the strength is, especially when we have such, um, you'd say, like, difference here between strength and weakness pretty much across the board as we dive in deeper into it. Okay. Before I do that though, that's gonna be our trading portion. We're gonna hit that, but I wanted to kind of plant a seed so you guys can start thinking about that, the importance of it, because we'll find triangles, flags, cup and handles. We'll find head and shoulders patterns that have this ADX that could be actually quite fascinating here to look at too. But coming back to our regular charts, we had an interesting question come up a week ago or so. And it was about this. It was about, I'll just pull up the S. Well, this is an indicator by itself. We've been able to build on it a little bit here in this class, and I built some of it for you. but it did take a little bit of time. But we have some pre-builts in here. Now, this is an interesting one for comparisons as we're looking for a big picture risk on, market showing strength, or risk off. Okay. What this basically shows, this symbol, hope I didn't call that an indicator, this symbol here, I'll put it right into the chat so you've got it. It's a pre-built, and there you go. It's $ SPX A50R. If you read up there, it's the percent of S&P 500 companies trading above their 50-day simple moving average. What you're seeing over here, just so you see it, that is a percent. Now, how many do we have? We don't have a ton. Now, if we start to see, isn't this fascinating too? What are you getting? You're getting a trend. If you start to break up higher here, in using this pre-built indicator, pre-built symbol that ties into, it's more of an, there's an indicator component for sure. But if we start to break out here, this could be higher highs and higher lows. And what does that tell us? Folks, it tells us a lot about market breadth, the breadth of the market. If we can get that to kick in with some of these technology companies, wow, it could be really, really interesting. Right now, we're holding up at about 47.7%. I'll just say 47 approximately as it stands right now. 47% of companies that are above their 50-day moving average. Now, I did build an indicator to give us a range in here, but there's a lot more to it, trust me, to make this work because this is pre-built. They did it behind the scenes. So what I wanted to highlight here is that you can do this. In other words, you can change this indicator, and let me give you the numbers you can change it to. Uh, what's the best way to do it? How about this? Oh, you know what? Yeah, here you go. 20. I'm going to show you that we got the 50 already. 20, 50. I'm drawing it sideways. Okay, 50, 100, 150, and these are all the moving averages, and of course the big one, 200. These are all the pre-builts based upon the S&P 500. So let's just test a funny one out. I've never used the 150 here, but it's supposed to work, so let's just double check that it doesn't. But I'm just going to put a 1 in front of here, 50% more than the 100, and it doesn't work. Oh, fantastic. Okay, so that's what I read. 50 works. We know 50 works. Does 20 work? Dang it. Here we go. See, I like to test it. Now, that was the one I didn't check. Does the 20 work? It does not. Okay. How about the I know the 100 works and the 200 works. So strike the 20, bad information. Okay. So we've got the 50, the 100 and the 200 that you can put in here, which is interesting, and they're different numbers. Now notice collectively we've got about 54% of the companies above the S&P 200-day moving average on the S&P 500. That's interesting. It's more than half. And remember, bull market, bear market. So we're not just looking at the S&P itself that is heavily, heavily influenced by technology, like 40%, just looking at the Mag 7 on last note. I mean, we're clearly above the 200-day over here. That's a key difference, right? If I put it in, let's just go to our simple. Here we go. Ah, simple moving average right there. And you got it right there. Okay. And if I flip that into a 200, it's going to look a lot different. We're going to be clearly above it. What does that tell us, though? A little more than half the companies are actually above it. Right there. A little more than half is what it is. We were way above it, but isn't that fascinating? It's above it, but only slightly more than half of the companies are above it. So it's an interesting indication. Now I'm going to come over here and I'm going to highlight this one here. Now I initially did it because let me show you how you have to do this. I did it on the Mag 7% above, and I want to highlight it and show you what this ThinkScript looks like. Show you how it works. So the Mag 7 above 50%. Now if I just go with the defaults right here, fine. I'll make it a little bit thicker. We'll click OK. We'll take a look at it. Now that gives us our percentage right here. It is 85% of the Mag 7 is above that 50% average. Okay, so there's probably like one, I guess, that's not. above the 50-day moving average. Tesla, I'm not sure what it is, but that's kind of a record of where it's been. And you can see there's a big change over here. Now, if we look at this right here, it's just a very simple script, but I don't have a way to tap in to the database that we have with the S&P 500, the Thinkorswim has with the pre-builts. So you have to put them in place. One of the nice things that I can say about this, that's the script itself. Let's just share it so you have it. And we'll call it exactly what it is. So you guys have it. But it's a fascinating concept. And I'm really glad that I got that as a topic request to look into, because we can adjust this one. I'll show you a few more things. By the way, if you're tuning in after this presentation, we'll do is we always have this in the description field as well under the YouTube link. So that's that. Now take a look at this. If you come over here, what makes this unique is this. I can click right here on the wheel and I can change it now to whatever number I want, 22. Okay, 22 right there. Click OK, and there you go. That acts a little bit better here too. I know we were dragging really close. In other words, when you were at 0%, they were all below the 50 on the last one. And in this case, they were there for a little bit of a period of time too. But notice this, this might not be that helpful, but I'm showing you the idea first, the Mag 7. So this is the concept. Let's look at that right now. And then we'll go ahead and show the other ones as well. There we go. Okay. So all we're simply doing, folks, is we're creating, first of all, we've got our length, and we have different ways to do that. We can adjust that. We're taking a total. We have to define what the total above is versus the total stocks. How many stocks do we have? We have 7. It's the Mag 7. We've got this number. The calculation is just getting that ratio, that relationship to the number of companies above to the total number of stocks times 100 to give us a percent. And that's what you're seeing over here on the right-hand side. So some simple basic math, but that is a sort of a straightforward calculation. Now, did I do another one for you guys? Of course I did. I did one more, but it took a little while. This is the NASDAQ 100. I did not do the S&P 500. Sorry. That's a lot of companies, because you can imagine how many are going to be in here. There you go. Now, there are some quick ways to do it, but there you go. You got to put them in like this, and there's a lot of calculation. There are a lot of calculations going on here. So remember, I'm showing this against any backdrop. I'll say the 50-period moving average, fine. We can leave this here. How many of the NASDAQ 100 are within that range? Using the same calculation, just a lot more data. Okay, it took a second to calculate. Did you see that? But then it spit it out. There you go. That is for the NASDAQ 100. So is it relative to the S&P 500 chart? Absolutely not. It's in and of itself. This is just a reference point on the chart. So we're getting a visual kind of like we saw over here on this chart right here. This is going to be funny because we got 2 of them here. There you go. It's still going to pull up the same one. It's the NASDAQ, right? It's just referencing the NASDAQ stocks. But what I wanted to just compare the two. 47% are above the 50 on the NASDAQ, on the S&P 500. Almost 51% are above here. I think the most unique thing about this is I like the concept, but when you have a chart here, it becomes more interesting. Can I just point out one other really fascinating thing just using the charts, and that's this right here, and then we'll move on. Look at this. Come on, stay straight, stay straight. There you go. We're above the highs here. This looks a lot like a bull flag, which is kind of funny, but it's just showing the breadth of companies holding above a level. We are not above highs over here at all. We're below on the S&P. Now, what's the difference here? NASDAQ, folks, tech heavy. Let me share this one with you too, but it can take a little while. I just tried to do one here for you to kind of speed it up a little bit, at least so you have an index here to utilize and share. Again, ThinkScripts aren't guaranteed for time or accuracy, but here you go for this one. and this is percent above. And again, remember, the unique thing here is you can change it to whatever number you might be looking for. Short-term moves, what does that look like? Do you want to have just your own basket of stocks? No problem. Just use semiconductors or whatever, something like that. Can take a little bit of time, but there you have it. At least you've got what's moving now in the form of the NDX, which is the 100 right there. Okay, so that's wow. Is that four things we've already shared? I believe so. Okay, so cool stuff here. We talked a bit about. Let me take these off for a second here. Earnings and an earnings related trend on the chart. Now, there have been some adjustments to this earnings trend that I think are really quite cool. Remember, when you're looking at earnings, what's so nice about it, let's go ahead and just pull up a stock, Apple here, or anything. There is a reference over here to earnings on the Analyze tab. And you can see it over here with earnings, and that's your direction of earnings. Earnings higher, that can be a nice sort of a structure, you could say, behind the scenes for a chart. If you think a stock's going to go higher, is the value of the company in terms of its earnings also going higher over time? It's interesting to see. This will give you a 2 year. It gives you some cool data up top to track as well. You know, what happened 5 days before earnings and 5 days after, right? It's some good information. Um, this one, and there was a portion of it built a while ago. I made some adjustments to it. I'll explain that as well. Historical EPS line. Now, the beauty of this is you can have it down here, and I'll point it out to you. In fact, I'm going to kill these other indicators just so we can highlight this right now. There you go. So it shows the direction of the earnings trend. Okay. Um, it's even more valuable, I think, when you go back over on a weekly time frame and add it here. So historical, like I'm just going to put it on both here. Historical EPS line, and we're going to adjust it here. Now we've got it over here, but it's kind of things are kind of thrown out a whack a little bit. Let's go to a 10-year chart, and that should be totally sufficient to get what we're after here. That is what earnings have done, and ooh, there might have been a stock split, which is going to be another interesting component to look at. Let's do this. I'm going to highlight this range here, maybe post a stock split. The beauty of this is you can put it and kind of underlay it on the chart itself. You just drag it and drop it into the price field right here. And then now you've got earnings behind the scenes. And it's not a perfect indication, but it is interesting. You'll note that as we are getting higher highs on the stock price itself, well, we're still reaching higher highs, clearly. Let's highlight the earnings themselves right now over here on the chart. Okay. Yeah, higher highs. And this tends to be, and this is the nice thing about this here. Well, here's April. Is that always, these are great comparisons you can make because how was April? This is how a lot of analysts will do this, institutions. You have to look at it, and this is why it's so cool to see it here on a year over year. You see it Y/Y or YOY, year over year. Do you see April? How are we doing on the last earnings? It was down from the prior high and it's denoted in red. Is that necessarily bad? Well, it's a higher low. But notice one thing, if we're going year over year and we're focusing on this, key point, April to April, it's a higher low. It's not just a higher low, it's a higher high. April again, higher. Just connecting April's here. That was sort of flat and that was flat, but it was up from here slightly. Do you see what I just drew? I drew a trend here of April's on the chart. If you go across and draw every single one looking at quarter over quarter, generally you're going to get this. They're all going to be going like this to the upside. So not just the spikes, there's a lot of cool things we can see in here. We're not done either. When you point at the actual dot itself, it will tell you up top earnings estimates. You see this right in here. So the earnings estimate was 265. You don't even need to have earnings on the chart if you don't want to. You could, but it's a little more cluttered that way. It came in at 284. Same thing over here. They have been beating those expectations. Now, I did almost have it ready to go. It was an analyst, and I can have that next week though. So, how is it doing relative to the estimated numbers from analysts? I can have that next week. We'll have it like as a yellow line just to kind of compare, see if it's beating earnings over a period of time. Let's go ahead and just share this so you've got it. Okay, right here. Really, really helpful though. Here's earnings. So earnings, there it is. The earnings chart. Yep. Okay, you guys, any questions on this? Earnings aren't important. They're a gauge kind of behind the scenes. I like the longer term, but you can also look at the shorter term too and just see how they're doing. This one's along the bottom here. Here's a 2 year, adding it up, but you can kind of just see, yeah, is it going up or not? Very, very helpful to know what's generally occurring with the company. What's happening with Home Depot? Home Depot this was one of them that had been going down. Does this give us a view? If you ever want to see it, what's been happening with earnings? You got the trend here. What do we have over here under the Analyze tab? Yeah, and fundamentals for Home Depot? You got five. It's interesting. You got a bar graph, but isn't it nice to view it on the chart itself? What are you guys seeing here? You know what really caught my attention? First of all, this was beautiful over here with earnings. Do stocks rise with earnings in general? Well, they did over here. Do stocks go sideways with earnings? We've got a long enough time frame to show us this. Now, one thing that's slightly concerning, we just made a new low, clearly a new low there, and we are beginning to break down. I don't know. It's a discretionary company, right? It's discretionary. You think about, well, less money, gas prices, whatever the case might be, inflationary pressures. Hopefully there are some signs that it's coming down, but also some signs in other areas that it's still there. But you know, it's discretionary to a large degree, home improvement, and there you have it. Quick note, just up top. Let's just take a look at Lowe's. Okay, uh, if this begins to break lower here, we've been kind of holding at a lower scale. It's still making higher highs. This is sort of a negative, what you'd call a negative earnings divergence. So looking at these companies using a tool like this can be really, really helpful because you can say, well, you know, will it hold support here? Earnings have been down. If there's a further weakness, let's just say inflation stays up or something, that could be signs that maybe the consumer won't be there. And I'm just going to highlight this while I got you here. Double top maybe. And here's your lower range. If you start to take this out, it could be more serious. We don't know, but I mean, earnings are showing that, and I wanted to highlight that for you guys, okay? All right. Yeah, absolutely, Mighty. Anybody? Okay, let's see. Texas says, so is it continuously updating the analyst info for the future quarters? It is, JV, when it gets it. When it gets it. I don't know if it's taking it from exactly this same spot over here. Notice over here, I can put Wall Street estimates on. We have it. It's the data is flowing into the platform, and I found it. I captured it, but I couldn't quite get it to, it was different from what I was saying here. Now the earnings were lining up perfectly with the earnings here, but I don't want to show it because my estimation is that the Wall Street estimates over here, what Wall Street was expecting, at least you got 2 years here, which is a great tool to have. But if I can't have it be the same, I don't know what the data is. I'm obviously not pulling the correct data. I'm assuming that this is exactly the correct data here and that mine was off. The earnings were perfect, so they were coming in line with exactly what you were seeing here on the charts. Okay, to get that. All right. So a really cool tool. It gives you signs in terms of earnings breaks and how it's been going in the general direction of those earnings trends. Now, we got to get into some of the think scripting. I was falling behind on some of the topic requests, so we had to hit those today for sure. I want to make sure we're getting those out to you guys. But if we're looking over here, one of the key signs is we're looking at, say, for example, the NASDAQ itself, showing a lot of strength. Are there indications of extreme trend strength? I'm talking ADX 25 to 50, 25 to 50. Above 50, it gets a little extreme, but are there stocks that are in that range that Wells Wilder, had discussed? I'll tell you what, I'm going to tap in over here and just make a quick adjustment to it. See this ADX? We have an ADX crosses above 25 within the last 10 bars. Simplest code you'll ever find, but it's so powerful because it's already, I mean, it's tapping into that extensive indicator, right? One of those classic indicators right there. That's what he broke the ADX down to, average directional movement. Doesn't give us, it's funny, it doesn't give us direction, even though it's called directional, uh, the average directional indicator, but it gives us the trend strength. I'm going to share it. I know it's small, and you can actually do this right in the condition wizard if you want, but I'll put it in just so you have it right here, and we'll pull it up over here. And the beauty of this is here's the ADX. Wow, I think I've shared like 7 today. That might be a record. 7 scripts. If I come over here, and the nice thing about this is sure I can see it, and I could do this. I could say, okay, here is Cisco. Or CVS, for example, either one. Here's CVS. Okay. Um, well, we can keep the earnings on down here, but what I wanted to add in was ADX right there. Top indicator, actually. It's alphabetical order, but there you go. We can keep it red, and we'll go 4 here. That's our ADX. Okay. Actually, let me just do this for now. I'm just going to take the show plot off. I want to highlight it as we're on it right now. There is our ADX4 strength. Fascinating. How this is interesting too. This was just on the fly choosing this too. Notice that's 25. We're holding below it. I'm looking between the 30, the 20 and the 30 right there. Where's the strength come in at? Well, according to the ADX, what Wells Wilder said, it's above 25. Okay, so here we go. That's above 25. You know what's interesting? I just mentioned on Apple too, Apple as well, breaking above a resistance level. It's weird how it does it. The funny thing is it oftentimes will lead it by just a little bit. Like when we took out this 80 right there, this 80 number, we're breaking above that 25, very, very close to it. And we broke out above 80 there. Remember, this is an extreme trend indicator, is showing extreme trend strength. It doesn't tell us direction, which is funny. It won't show us direction. We have to look for the charts for that, but you guys are excellent with the charts. See that? That's a simple ADX sign, right? It's so simple. But this is the one that's really kicking into gear right now within the markets. And the beauty of this is yes, I can punch in those symbols because I have it set up over here in my scan, or because I have saved it, I can load it up now as a scan query in my personal folders, which I have right over here. And because of that, where's that scan going to show up at? Right over here in my watch list. Personal watch list right there. ADX. There you are. Amongst all our many others, ADX. Trending. Relative strength tells us what could be trending. Now we're seeing where the trend strength is. There was Apple, top of the list right there. Just barely getting above there. Now, this is fascinating because it tells you what Wells Wilder said. If you are greater than 50, you could be overbought. It could be so extreme that it could snap down in the other direction. Notice over here, there's your 50 right there. That is 50. Did you pull back from there? Yeah, you did for a little bit. In fact, you went very, very much below 20 because less than 20 is non-directional. The sweet spot that we're talking about on trends, and the whole point of making this discussion today was we are in between 25, and 50. And you guys have that right here now, and you can run through those scans to match what we're seeing in the current market over here, okay? Let's go through some of these right here. Okay, this is perfect. Look at Bro. Bro is down, but where's the ADX? Remember, it doesn't show us direction. It just shows us trend strength, extreme trend strength between that range. Are we up to 50 yet? No. Could we see more to the downside? Yeah, we could. CAH. Oh, we just looked at it. There it is. Above 25 right there. Be mindful of it. Be careful. It's a downtrend is what this is picking up on. This is a 14-day period, folks, right there. 14, and we're picking up on that right now. But these are really interesting. Datadog. Oh yeah. Well, the Gap did it for sure. Obviously, a lot of these did have the big, sort of a big AI sort of announcement gap that many of these have had. FTNT. Oh, I should have. I already knew that had a gap to it. Halliburton. Okay, so this shows within the last 10 days. This is a good example here because it did in fact dip. Now, if you look over here towards the beginning of the trend, we began to crack the 25 right over through here, giving an indication of potential trend strength going forward. Okay, there was enough to reach that level. IBM. Oh, wow, that's really been out of the loop, hasn't it? KMI, just going through and looking at some of these over here. All right. Yeah, that might actually flip to the other direction if it starts to show strength, but now we're back below 20. This could be adjusted real easily if you didn't want to have this many stocks. Ooh, McDonald's is going to be to the downside. Look at us breaking above 25 right now. You had one to the bullish side over here too, but began to break lower. This is dropping for the same reasons that Home Depot and others are as well, just in terms of discretionary spending is what they've been talking about, but a really cool tool. By the way, if you wanted to adjust that again, so last point I'll make, just go in here. All you got to do is adjust that 10 bars to whatever look back period you want. What do we have right now? We got 95 companies in the S&P 500. I should be looking actually at the NASDAQ right now because that's where we're getting a lot of our strength. Let's come over here and let's adjust this guy to not 10 bars back. Actually, I don't even need to do it here. Let's just go in to our ThinkScript editor and just flip that to a 5. So simple. Okay. 5 days back, another adjustment. NASDAQ 100, folks, not the gap up. That's an accident. There we go. 100 and scan, and we're done. Now it's going to give us in the last 5 days. Now, this is much, much more in terms of what we'd be looking at. Oh, I want to look at a few, just two more and we're done. Starbucks and Tesla, S-Bucks. Oh, okay. What were we just saying? Breaking above a range. Now we're only looking at 5 days back, and we're looking at that group that's really been moving. Notice we broke above 100 prior highs. A little bit of a flag here, possibly. Breakout. Last one, Tesla. Just barely starting to move above that 25 right now within the last 5 days for sure. Higher high, first time really in this trend, a higher high, higher low. Some might be waiting for a pullback here, but you've got a fascinating indication here. Folks, hopefully you found this informative, useful. That was the goal today, but we did focus a lot today. Well, we did the topic request for sure. Hopefully you found that useful. We shared relative strength, really interesting there. Chart versus relative strength to maybe see where that allocation might be coming from institutions. And then lastly, we really spent a lot of time on what's really moving in the market relative to ThinkScript trading. Many of these are just ticking above the 25 right now. So utilize those tools. It has been good being with you today. Thank you so much, Cam, for your help today in the chat. And I think we hit a record of 7 scripts today sharing there. But on that note, we'll see you all next time. And be sure, yeah, if you have any future questions, let us know. Take care all.